A
Gracias.
continuación, damos paso, como adelantaba Joaquín, muchísimas gracias al Keynote del curso de verano, el avance del proceso regulador en la Unión Europea, hitos y retos relevantes, por primera vez a cargo del director ejecutivo de Eurosif, el Foro Europeo de Inversión Sostenible, Víctor Van Hoorn. Víctor, welcome to our summer course. Bienvenue. We are really happy to have you here for the first time in one of our online events. So I will not take any more time away from the content. So welcome, and the floor is yours.
Thank you very much, Andrea, and thank you very much for Spainsif to inviting me today to give the keynote speech. And want to take the opportunity to thank you for the wonderful collaboration over the past year in all the efforts we've been doing together. I think this morning I will try, and the objective of my keynote this morning is to try and give an update to participants on what has happened on the area of EU sustainable finance, as well as what we can expect in the future. But rather than go through very descriptive motions of describing what's in the different pieces of regulation, I'd rather spend some time on giving a bit of perspective on how we can expect some of those policy initiatives to play out, and how we can see the market for sustainable investments in Europe developing and responding to that. Maybe we can move to the next slide. So as I said, I will try and focus obviously on what is going on the EU taxonomy, which is the flagship proposal. There's been a lot of talk about it, and we see regularly press releases and coverage in the media on the complexities of this instrument. Then I will focus on a piece of regulation as obviously much more directly impacting the market for sustainable investment strategies and products, the Sustainable Finance Disclosure Regulation, and then I will then pay some attention and try to give you a bit of perspective on where we can expect the next EU sustainable finance strategy to take us over the next couple of years. The strategy, which is its publication is imminent in the next few weeks, so we will get an idea of where the European Commission wants to go in the area of sustainable finance. Maybe we can move to the next slide. Just to provide an overview of Eurosif very briefly, as Andrea said, we're the European Sustainable Investment Forum, bringing together the SIFs across Europe, and our mission is to promote sustainable investments through financial markets and support financing for public and private capital markets of investments that make a measurable contribution to sustainability goals. And they've been very happy to have Spainsif as a very active member in our working groups, and sort of great collaboration over the last year and before. Maybe next slide now. So let's dive right in. On the taxonomy, what's been interesting from where I sit over the last couple of months, particularly as we are finalizing the first parts of the taxonomy, actually trying to define what we consider sustainable, or we consider green or dark green, if you want, is that there's been a lot of confusion, I would say, amongst financial markets participants, but also a lot amongst policymakers, as well as many sectors of the economy that feel impacted, we feel covered by taxonomy, about what this instrument is supposed to do, and what it is not supposed to do, or is not supposed to be doing. So I think we have faced a situation in policy making where there's really a lot of confusion. So I think the easiest way I find to explain it is that it is a classification system, and it's a classification system for which, for now, we only have the first bit of the system in draft form, which covers the climate objectives. So climate mitigation. How do we meet the objectives of the Paris Agreement? How do we address concerns regularly raised by the bodies like the IPCC in its reports? And that's it. And then we have a second bit of the classification system, which covers climate adaptation. So essentially, it is only a classification system that aims to tell us what are the economic activities that we need to be doing more of to reach our goal of climate neutrality in 2050. And I think what we've seen is there's often a confusion that the taxonomy will, from now on when it applies, be the list of investments that you have to invest in as a financial institution. But actually, there is no such thing in the taxonomy. There's no obligation whatsoever for either asset managers, banks, investors to, have a part of their lending or even their entire lending or investing aligned with the taxonomy. There's no such obligation exists, and therefore, what the logical consequence of that is that when it starts applying, hopefully as of next year, investors and banks will still be able to finance economic activities that are not yet aligned with the EU taxonomy. So in that sense, you could say, will it dramatically change? For example, the big question is, will it dramatically change the cost of capital for many sectors of the economy, because now banks and investors will only fund those activities? We don't really think so. What we may see is over the next couple of years, gradually that tool being more and more important, and therefore see a gradual impact. But it's not going to shut out of capital markets or financial markets entire industries as of next year. And I think in that the reasons for that as well is that at this stage, it is a classification tool that talks about sustainability. It does not provide necessarily any answers to whether these are good investments from a traditional investment perspective, where financial market participants looked at, what is the performance I can expect and what is the risk I'm taking. So in that sense, the taxonomy is completely silent about that. And I think what we're seeing is there's a lot of anxiety of companies saying, well, I will not be able to meet the taxonomy. It is too complicated. I will not be aligned with it. But fact of the matter is, if you look across, European companies, but also internationally, you'd struggle to find many companies, even any company, who would be at this stage fully aligned with the taxonomy, 100% for its operations. And the reason for that actually comes from its very design. It is a list telling us where we need to be in 2050. If we were already where we needed to be in 2050, then we wouldn't have the climate change problem, and then we wouldn't need something like a taxonomy. So in that sense, not being aligned is not a bad thing. It is the normal state of affairs. And I think where we're seeing now that companies will probably struggle and investors will struggle over, say, the next 2 years, is understanding what is the difference between am I eligible for taxonomy? Am I aligned? Am I having investment plans as a company that is helping my company transition? So all these things are going to be important. Maybe move on to the next slide. So the question is, where are we at now in the discussions on the taxonomy? So as I said, we have really only 2 chapters on the environmental, on climate objectives from the 6 environmental objectives. I have to confess, I cannot always remember them by heart, but it covers, other issues like biodiversity, protection of nature, pollution, water use, and circular economy. And at this stage, we are still having to agree on the 2 first chapters, and it is difficult. And I think the difficulties in the agreement stem from a lot of the misconceptions I've just talked about. Is that certain industries and certain countries who are particularly relying for their energy system on certain technologies feel very threatened because they do not understand the instrument, and they're afraid that once not considered sustainable, that's the end of the story for them. And I think there's a lot of work for policymakers as well as organizations like Eurosif to try and address those misconceptions and those myths versus facts. So we hope by the end of this year to see actually finalize the first 2 chapters on climate mitigation adaptation. If you know a little bit the European rulemaking process, We are waiting now for the European member states together, as well as the European Parliament, to decide that what has been proposed is sufficiently ambitious and actually, matches what we would expect from the definition of sustainable economic activities. But I think fair to say, if I look a little bit in the future for the rest of the year, it is going to be a complicated end of the year for the taxonomy, in that we're waiting for those two objectives. Simultaneously to that, we are expecting the European Commission to make a separate proposal to address some of the very complicated sectors, which are, do you include natural gas or not as transition in the taxonomy? What do you think of nuclear energy? And actually the very complicated issue of at the agricultural sector, which is always politically very sensitive in the EU. And those ones will be, dealt with, or there will be a proposal towards the end of the year, at the very same time that we have to decide on those first two climate objectives. And what you are also seeing is that the taxonomy is, as a classification system, not the decisive factor for many of the policy discussions. Yet what you are seeing is that the taxonomy is becoming a playground to decide discussions on other policy areas, particularly in the energy or agriculture or forestry space. So the taxonomy doesn't intend to have any direct impact on those sectors. Yet what you see in policy and political terms is that people are starting to connect different issues, unrelated issues. And so once you have many unrelated or issues together at the European level, the political deal making necessary to make the machine advance always gets very complicated. So I think we can certainly expect by the end of the year to have see many headlines and see many complications around the taxonomy and how we deal with that. The taxonomy obviously is also very important for investors because of the information it generates about companies in which investors invest, as well as the investors themselves, because the taxonomy, as I said, has no obligation to lend or to finance certain activities. It does contain very clear reporting obligations to enhance transparency. So non-financial companies are expected to, as of next year, start disclosing how their business aligns with taxonomy, be it in terms of revenues, be it in terms of their plans to transition, so capital expenditure, and their operational expenditure. And equally, large investors, large companies, financial companies in the scope of those rules will be expected also to disclose how their own operations align with the taxonomy. So a lot of, it's a big challenge for all these companies to operationalize this reporting and to generate that transparency. Maybe we can move on to the next slide. But I think here, that's where I think we need to put all of that policy making and this operation, or the challenges in operationalization, in perspective to where we actually are. Where are we at in the taxonomy in the kind of, I would say, real world? And what data tells us, as you can see from the graphs here, which come from publicly available reports. But on the left-hand side, what you see is that actually, only 2.5% of European funds currently available to investors in Europe will have a alignment that is higher than 5%. So they will have more than 5% of their invested money, their invested assets, having an alignment of more than 5%. You see the vast majority of investment funds will have very little to no alignment, which I think is not a surprise, but it tells you the challenge of where we are at, and the extent of the work we need to do over the next decades to change our economy and to get investors to fund much more of those sustainable investments. But equally, that is not surprising, because if you look at the graph on the right-hand side, you see that the level of alignment of the large stock markets in Europe. Here the example, you see the French CAC 40, the DAX in Germany, and the Euro stocks. The level of what we call taxonomy relevant, so whether the economic activities undertaken by those companies are covered by the taxonomy, is already limited. If you look at global, take a global perspective of the EU, it's often estimated that it's around 50% of the economic activities that are covered by the climate taxonomy. And you see that the level of alignment is extremely low, which explains why in turn investment funds have an extremely low alignment. So I think it's always good to bear that in mind, to see whether at this stage of the process the taxonomy will have a very material impact on investment decisions. We don't know. We will have to see how the market evolves. But the fact is, as you see from those graphs, is that the taxonomy in its current form covers a very small subset of the investment universe in Europe and worldwide, and therefore, it is a useful. We expect it to be gradually a useful piece of information and one of the data feeds that investors take into account. But we don't see taxonomy as being the material decisive factor for certain investments that many sectors think fear in terms of their access to capital markets. So I think it's very good to bear that in mind. If we can move on to the next slide. So moving from the taxonomy that we've seen, classification system, we still are facing political challenges in getting that agreed and finalized. So the question, as I said at the beginning, the other piece of regulation that is linked to the taxonomy, but also probably of much more direct impact on the investors, is the EU SFDR regulation, the Sustainable Finance Disclosure Regulation, which regulates a large part of the products that would claim either to take sustainability risks into account, would promote environmental or social characteristics, or even more ambitiously would have a sustainable investment objective. And there, what we have seen is that once the regulation was adopted, everyone in the industry got very, very busy preparing for meeting all the compliance deadlines, for meeting all the reporting requirements, starting to understand where do we need to do our work. So I think a lot of firms are getting ready for that, which is a natural evolution when you see these regulatory frameworks being decided. One of the main challenges, though, from the SFDR, which still remains a few months after its entry into force, and so quite a significant time after the final rules were decided and people started implementing them, is what we call the classification of products. SFDR distinguishes several categories of products. There's broadly considered the products that look at risks. So they look at ESG risks, at sustainability risks. They see what is the impact of those risks on my portfolio. There would then be a second subset of products that look at really embedding environmental and social considerations much more in the portfolio construction process. And finally, the products with a sustainable investment objectives, Article 9 products, which are considered the most ambitious and which would really take a more holistic view of sustainability and would apply what we called the do no significant harm principle, which is a key principle of EU sustainable finance policy. The idea that to satisfy the sustainability objective, your investment needs to make a contribution to one of the environmental or social or governance objectives while doing no significant harm to the other objectives. And what you see is that actually the marketplace is struggling, as well as regulators are struggling to come up with the answers about which investment strategy, which product falls. And there, I think it's fair to say at this stage also over the last months, we are seeing that in the struggle to find answers to these questions, it seems that people are coming up with different answers in different places, and that we are in a situation where we are waiting, or we hope to get a European-wide answer to these questions, but we are seeing more national type of regulatory guidance emerging, and without wanting to comment in detail on it, but I understand that in Spain that the Spanish regulator is one of the regulators having make statements about that. So I think this is probably the space for investors that I would watch mostly in the next coming months, is how do we deal with this issue. But indeed, moving on to the next slide. I think here I want to spend a little bit of time, because this is something where talking to market practitioners, I hear that this is probably one of the most challenging bits to make sense of, which is this notion of sustainable investment and this notion of the do no significant harm principle. So why is sustainable investment that important? Well, because in a way, the definition of a sustainable investment is key to determine whether a product can have or can be considered as having this sustainable investment objective. So therefore falls into the most ambitious Article 9 category. But also because that definition uses concepts which slightly overlap with the EU taxonomy. And here it's good to remember what the EU taxonomy as a classification system does. The EU taxonomy is very similar in that it looks at an economic activity, so not at an investment, but at an economic activity, and says, okay, this activity, what significant contribution does it do to which environmental objective, and how does it ensure that it does no significant harm to the other environmental objectives? That's the whole classification system. And what you're seeing here, unfortunately, is that the way the SFDR defines sustainable investment and the way the taxonomy deals with it is not the same. And this has been a challenge for market participants in understanding, well, how do those two texts interact? And that has caused always quite a bit of irritation and frustration in having to deal with these questions with no clear answers. But in general, when Eurosif talks to policymakers in Brussels, what we hear is, well, you have this sphere of sustainable investments, which makes a contribution to the objectives, which, by the way, is not defined. So there's no clear and detailed set of criteria that, as a market participant, you need to apply to identify what sustainable investment is. So this is, largely left to your assessment. And then within that sphere of sustainable investment, there is a smaller subset of what we call a sustainable economic activity under the EU taxonomy. And here, that's the way at least we look at it, is to say, well, how do you deal with that? And the fact is, to assess under Article 9 what a sustainable investment is, you can obviously inspire yourself from the taxonomy, but that is still under development, and particularly on things like social taxonomy, on which we hope soon to have a bit more news from the European Commission actually in the next couple of weeks, or on questions around governance aspects. There, it's a little bit more confusing how you do the analysis. Whereas on the environmental part, we expect that the EU taxonomy to be a source of inspiration. And I think here it's important to note, and that's the, unfortunately for you, the lawyer in me emerging, but the taxonomy text talks about a significant contribution, and the SFDR text talks about a contribution. So this is something where we expect over the next years to see some changes and some movements also by the EU institutions to make sure that more clarity is provided to the market. But where we can move on to the next slide. All of that, the taxonomy and the SFDR, obviously then raises questions in the end of, okay, but what does that mean for investors? What does that mean for somebody, be it an institution or a retail investor that wants to put his money, his savings, his capital into products and investment strategies that are considered ambitious and meet those sustainability objectives. So in parallel to that, we have had another piece of legislation called MiFID II, where the EU institutions are trying to embed the notion of sustainability preferences. And the idea that sustainability preferences, once a client expresses some preferences in his, in his investment desires, that the advisory process needs to ensure that he can, find those products and have his preferences matched with those ambitious products. And the way that the latest proposals that will probably soon be adopted, what you see is a distinction between two categories, three categories actually. First, the client will be expected to formulate a preference expressed in possibly in terms of taxonomy alignment. So how aligned is the investment product with the taxonomy? The second will be an expression of the share of sustainable investment. How is the product aligned with his desire in terms of percentage of sustainable investments he would want to invest in? And finally, and that is something very specific to SFDR, where I won't go into much detail, but happy to take questions on that afterwards, but it's the proper integration of the principal adverse impacts in the products. I think what's interesting to note here is that whereas last year, so in the summer of 2020, when the European Commission consulted stakeholders on those changes, there was a very clear reference to the SFDR. There was a direct link in saying, well, the products that classify in this categories will be considered good enough. The European Commission changed its mind there, it had an evolution in its thinking, and said, well, we don't exactly know how those products are going to be categorized. Therefore, there's a risk that people may still end up with the wrong products. Therefore, they've moved away from the referring to classes of products to actually moving to this expressing percentage point or expressing a share of preference, and to express it in terms of a share of taxonomy alignment or a share of sustainable investments. I think we will have to see how the financial industry adapts to that in the course of next year as they prepare to deal with those changes. But I think from our perspective, certainly what you're seeing is that it will be a difficult system to implement. I think it will be difficult to communicate on some of those aspects to clients. As you have seen from the previous graph, a client coming in and saying, I have real ambitions with my money to do something good for the planet. Therefore, I want taxonomy alignment of 30, 40 or more %. As you've seen in the graphs recently, the result might be that currently there are not that many products or actually no product that can necessarily match those desires. So this will be a communication challenge. And also, as we've seen right before, if you talk about the share of sustainable investments, there's still not a lot of clarity on how that's actually defined, which means that currently we are seeing different companies, different investors taking a different approach, which means that you will have to see between different products how comparable those informations are really. But I think this is always a case of communication, and I would say to people here interested is that we may see in the future the European supervisory authorities, so the ESMA, the EBA, and EIOPA, deciding to make use of their powers on the SFDR to look also at the way those products are marketed. So this is also another space to watch for the future. But maybe moving on to the next slide now. As I said, this has all been part. All what we discussed previously has all been part of the 2018 EU Action Plan. Now, obviously, the action plan, as the Commission will tell you regularly at events and public interventions, is that they've completed all the actions in the Action Plan 2018, and therefore it was necessary to come up with a new policy program for the 2021 to 2024 period. So that's the end of the political mandate of the European Commission. And now we know that the strategy is expected, and the latest information I was told still even end of last week is that the strategy should be expecting now on the 6th of July. So as I said, actually next week, so very, very soon. What are we expecting in the strategy in terms of what it will seek to cover? What we understand very clearly that there will be, some of the themes, the overarching themes of the policy agenda will be to a much closer look at the risks to the financial system, how our climate change and for example, other risks like biodiversity loss, can translate into serious risks for the financial system overall, and therefore how do central banks, prudential regulators need to look at the financial stability. So how does sustainability impact financial stability of the financial system? Another theme will be how do we align the financial system with all the EU developments that we have seen since then? Because 2018 action plan happened in isolation in a way. It was an agenda for the financial sector. What we've seen over the last couple of years is now with the European Commission that took office under President von der Leyen in 2019, with the EU Green Deal, we have a much more holistic policy agenda covering all sectors of the economy. And recently we had, as part of the EU Green Deal, this European climate law that was agreed on, which put into law the greenhouse gas emission reduction objectives of minus 55% by 2030, and actually the objective of carbon neutrality by 2050. And so the question is now, how does the new sustainable finance strategy reflect the fact that we now have those additional policies and items in the agenda? Another major point is transition. How do we shift the focus from defining green to actually funding the transition of the economy, or paying attention to how we need to make all those sectors of the economy evolve? As you've seen from the graphs I've shown you on the taxonomy at this stage is a very small subset, both of the real economy, the stock markets where you have all the large European listed companies, and the alignment of the investment products. So the investable universe is very small. So the question is, how do you now tackle the much bigger investment universe, which is how do you get all the sectors that we need, to transition? How do we actually get them moving? And finally, also, there's questions of just transition, and how do you ensure that certain parts of the EU that are, maybe more reliant on certain types of energy that really do not fit in the scenario of carbon neutrality by 2050, how do you support those member states more structurally in making that transition? And another element not listed here, but it's also the EU is clearly thinking a lot about how what it does can serve as a kind of international standard for other parts of the world to follow and to take inspiration from. And finally, alongside the strategy, we will see, probably a package of measures, including a green bond standard and a few other bits and pieces of legislation and technical rules that we are waiting to see. As maybe some of you who might follow by chance our social media presence, we have seen Eurosif wrote not so long ago to the European Commission on its ideas on what we would like to see in a new sustainable finance strategy, and some of the key asks or key ideas were how do we make sure that we have a coherent implementation or understanding of minimum standards for ESG funds? How do we make sure investors focus more on engagement and stewardship as a tool to change the behavior of the companies they invest in or influence those behavior? How do we look at the definition of net zero in the context of COP26 coming up later this year, where we're seeing many net zero pledges, but they're all slightly different. They take all different scenarios. They take different assumptions in the way the economy is going to decarbonize. And finally, also looking at what do we need to do with, if anything, with ESG data providers, simply because what we're seeing is data providers are becoming a cornerstone for the market in the way the whole financial system deals with sustainable finance, because there is literally quite impossible for many of the market participants to comply with SFDR, with the taxonomy, or do, for example, climate modeling for the net zero pledges without at some point resorting to the services of third-party data providers. So these are some of the ideas that we've been discussing internally with colleagues. And maybe move on to the next slide. We finish off. We've talked about the SFRD, FDR. We talked about taxonomy. We talked about how this fits. Obviously, beyond what impacts the financial sector, there are other initiatives going on. More recently, around disclosure of companies, around the CSRD proposal, the Corporate Sustainability Reporting Directive. We will see also initiatives around the area of sustainable corporate governance this year. And finally, to deal with the data challenges, the European Commission is proposing, we hope in the autumn of this year, the creation of a European single access point for financial and non-financial data, which should help with those challenges. So, in conclusion, a lot of activity, a lot of development, a lot of things happening. So a very busy policy agenda in the future with new initiatives, as well as making sure the ones proposed since 2018 are working and operational for the markets. So I suggest I stop here and see if there's any questions or comments.
Thank you, Victor, for this update. It was excellent as usual. We do hope to have you back again soon into these activities which are devoted to the Spanish market. If there are any questions from the audience, we can receive them in our email and the chat, and we will transfer them to you by email afterwards. So thank you again, and have the best rest of the day.